The Greek crisis continues to send shockwaves across global markets, with credit default spreads on Greek debt widening 75 basis points to a record level of 1007.8. But back home, bankers and economists feel that its impact on Indian markets for now will remain negligible. Anirudh Ghosh and Simran Gill report.
Greece is burning and fear of contagion has swept across global markets, a fear that they've become all too familiar with now. Indian markets too have reacted negatively to the news coming in from Greece. But economic stalwarts like RBI Governor Spivey Reddy don't expect any direct impact on the Indian markets.
The Indian banks don't have much exposure at all, nor we have very close trading or it's not a large country in that sense. So I would say that from India's point of view, it has the second order effect. Because of Greece, then something happens in Europe. Now then you have an engine of growth of the world economy. If that is affected, then it will transmit itself.
While some foreign brokerages have voiced their fears of the Greek crisis hitting Indian markets, international ratings agency Standard & Poor's see a negligible impact on Indian investor confidence, a view that is shared by the chairman of India's largest private bank.
But if I look at it, that region has, particularly Greece, has very little direct, I would say, impact in terms of trade or business or investments into India.
But even as investors and market makers try to put up a brave face, they will have their fingers crossed, hoping the turmoil doesn't get any worse. The last thing a fragile recovery in India needs is another global crisis to deal with. Simran Gill, Anirudh Ghosh, ET Now, Mumbai.